What is going on, investors? Hopefully, guys are doing well out there. That is right. It is time for Tesla earnings as they came out after the bell. We'll get into them. Take a look at the revenues, the profits, the gross margins, everything that I think you need to know when it comes to Tesla. Now, I'm seeing in the after hours stocks up about 4.5%. That's basically getting back the losses that this stock saw during the regular trade. It was down about 5% during the regular trade. So quite frankly, even after this pop in the after hours, Tesla is actually about even for the last 24 hours in terms of its stock price. Now, that's not a bad thing because as we go through these numbers, I think you're going to agree. This is one of the most well-run companies that we see here on Wall Street. It's also navigating a supply chain and it's handling inflation quite well. In fact, it might even be a hedge against inflation. We'll talk about that here more in a second. So we actually like that this stock is kind of hanging out. Maybe we get areas of pullback. So we'll talk about Tesla from a technical perspective as well. But I first want to jump in to these Q1 numbers. We have revenue coming in at $18.76 billion. That was 80%, 80% year-over-year growth on those revenues. Talk more about that here in a second. That beat expectations by about $920 million. You had automobile gross margins at 32.9%. Some of you might argue, well, some of that includes regulatory credits. Well, strip those out and you got 30% gross margins on an automobile, not an iPhone, not a video game. We're talking about a car. They have 30% gross margins. And my guess is in the upcoming quarters, that number is probably going to continue to go up. We'll see evidence of that when we jump into these numbers. We had that $18.756 billion worth of revenue. That was 81% year-over-year growth on that revenue side. About $16.9 billion of that is automobile sales. The rest is solar and services and a couple other revenue models that Tesla has. But the most impressive thing that has Tesla shareholders probably really loving this report and maybe potential Twitter employees are scared out of their mind is notice over the last quarter, just quarter over quarter, you took your operating expenses right here from $2.2 billion down to $1.9 billion. So you grew your revenue quarter over quarter by about $1 billion on the automobile side. You grew it over $1 billion on the total revenue side, but your operating expenses actually went down from $2.2 billion down to about $1.9 billion. That is going to blow up your income from operations in a good way. Look at this. Just quarter over quarter, you went from $2.6 billion up to $3.6 billion. We added $1 billion to our income from operations, which is almost exactly what we added to the revenue side. Every dollar that went to revenue growth quarter over quarter for Tesla flowed all the way down to income from operations. This is something that you dream of as an investor. Now, let alone year over year, you're up 507%. From $594 million of positive operating income, they went all the way to $3.6 billion. So while I was focusing on quarter over quarter, because you don't see this very often, especially in an inflationary environment and where we have supply chain issues as well, to grow your revenues by $1 billion quarter over quarter and then have all of that revenue flow all the way down to income from operations because you are able to cut cost is absolutely phenomenal. Whoever is running Tesla is doing an amazing job and probably, quite frankly, deserves a raise. This is what you dream of as an investor. We'll flow down through more of these slides. I want to take you to the Model S and Model X production. It appears that we've kind of reached, I don't want to say capacity, but they've got this back online because we saw for several quarters in a row, Model S and Model X production screeched to a halt. Now we're over the last 2 quarters, we were at 13,000 vehicles. Now we're up to 14.2. Looks like that's about, I'm sure there's a little bit more demand for those cars, but that's more in line with what we'd expect because in the previous quarters, we were under, 3,000 in Q2. Model 3 and Model Y production essentially hit a wall. It looks like they're topping out at about 292,000 cars in a quarter, but this does not include the fact that they just opened up a new production facility in Texas. They also opened up a new production facility facility in Berlin. So we would expect these numbers to reaccelerate on the Model 3 and the Model Y as those two facilities are pumping out those vehicles, quite frankly, as we speak. And they didn't come online until the very tail end of this quarter. And so we're not seeing that benefit. We'll see it actually in Q2. That'll be exciting to see once that comes. We did see a deceleration in solar deployed both on a quarter-over-quarter and a year-over-year basis. That was down 48%, but the storage deployed, these are kind of the power walls and the kind of the battery packs. This is based on their energy business. That was up 90% year over year, but it was down quarter over quarter. Again, they blame some supply chain issues and not getting certain components, especially on that solar side. That's why you see a little bit of a decline there. But as I'll show you, these are not necessarily profitable businesses for Tesla. And so in some ways, it could be a good thing that they've slowed down a little bit and maybe they come back and really generate quite a bit more profit for the company in the future. Supercharger stations up 38% year over year. That I have argued for a long time is a fantastic moat around those business. If you own an EV and you've traveled, charging it can be difficult. And when you have lots of charging stations out there, certainly makes people more comfortable getting into your cars. Here's one way that you lower your operating costs. So they see here, this is a Model 3 on the left. It says there's 171 pieces of metal highlighted. So they have all these welds and they have to put all these pieces together. Well, here's their new Austin-made Model Y body structure. It's simply just two pieces of metal and there's 1,600 fewer welds. So obviously that's less time, that's less money, that's less things that need to be developed and less things that need to be broken and depreciated and all those types of things. Well, they're efficiently making these cars over at Tesla and they're making them more and more efficient underneath that hood. And that's certainly, we saw evidence of that when we saw those operating expenses drive down. Now, in terms of their statement of operations, here's our $18.7 billion worth of revenue. I talked about how you have this energy and storage business. The revenues for that was $616 million, but you had cost of $688 million. You also have services and others. Revenues on that was $1.279, but your cost on that was $1.28 billion. So again, everything other than the cars doesn't really make money with Tesla. So we can focus on it. We can talk about it, but until it really starts generating positive net income. And look, it's nice that from an operating perspective, those aren't draining on the companies because we actually saw that in quarters past and years past with Tesla. Now those are break-even businesses. And so it makes it a little interesting in that case. But really, all of your profits come from this $16.8 billion of automobile revenue. You minus off about $11.3 billion in cost, and you get very close to $5.5 billion of gross profit. We talked about how on the operating side, it's just really impressive on a quarter-over-quarter basis, and certainly when you stretch it out year over year, it's just phenomenal. Now, they have other costs over at Tesla. We've got some R&D that went from $740 to $865. I'm talking about quarter over quarter, but notice our selling general administrative went from $1.5 billion all the way down to under $1 billion. So they did a nice job. Maybe some of those costs in Q4 were related to getting the new factories in Texas and Berlin kind of online, and then those costs started to shed away. All things being considered, we come down all the way to income from operations, and you came down here to this $3.6 billion. Again, over $1 billion more than where you were in Q4 and up over 500% where you were in Q1. That's absolutely phenomenal results when you look at a company like this. Now, in terms of their balance sheet, I think we can start to say, what is Tesla going to start doing with all this cash? They have $17.5 billion in cash, another $500 million in maybe some Bitcoin or something, and they've got about $18 billion worth of cash, and they've got a business model that is wildly profitable. So what's fascinating to me with Tesla is they are able to grow their company, building new facilities overseas here in the United States, do all this in a difficult regulatory, inflationary, and supply chain environment, and they're growing their business organically. They have this $18 billion in cash. It'd really be interesting to see what they decide to do with that money because it's just sitting there and they really don't have a use for it, quite frankly, at the current time because the business is essentially funding itself. Total liabilities over at Tesla, including debt, are simply $30.6 billion. That is not a whole lot when you have about $18 billion in cash. That is probably the best balance sheet that we've seen over at Tesla. In terms of their cash flows, I talked about how the business is essentially funding itself. It had $3.9 billion of positive cash flow. They spent about $2.1 billion, including $1.7 billion on capital expenditures, another $1.9 billion here in financing activities, all things being considered pretty close to break even from a cash flow perspective. And again, this is as they're ramping up 2 brand new facilities, just absolutely phenomenal. Now, the last thing I'll show you on these financials before we get over and look at this from a technical perspective is probably the most impressive figure in the whole financial sheet. It's down near the bottom. It's one of the last figures they show here. This is automobile gross margin excluding regulatory credits. This is essentially the profit margin that Tesla makes when they sell each and every one of the cars that they manufacture, and it's sitting at 30%. 30%. That is Apple-like. That is tech software-like. And we're talking about a vehicle. That is why Tesla gets the premium valuation. If you are a bear of this stock, you need to start looking at these financials and realize, yes, if we want to back this in to a $1 trillion valuation on a price to sales, price to earnings, price to cash flow, it doesn't make a lot of sense, but you have to factor in multiple also includes growth rate, and it includes things like these margins that have gone from 22%. The reason why I'm highlighting 30% automotive gross margins is the fact in Q1 of last year, you were at 22%, then you went to 25, then you went to 28, then you went to 29.2, and now you're at 30. This is an inflation hedge right here in front of your eyes. As inflation is ticking up over 8% year over year, well, guess what? Tesla is able to squeeze that out of their products. That is showing you that this company has a tremendous product, a tremendous brand, and a tremendous ability to raise prices, and you gotta love that as an investor. Now, from a technical perspective, we're essentially where we are at the start of the day. The stock was at about $1,000. It's currently sitting at about $1,000. What we've noticed on our FANG stock recap show was we made a cluster of highs back here in November, up here at the all-time highs on Tesla, up over $1,200 per share. We made a lower series of highs in January, and then we made what appears to be potentially another lower sets of highs at $1,140. That was back in April. So Tesla, quite frankly, could walk all the way back up into about the $1,100 range. But if it does not eclipse the previous highs here at $1,150 per share, we would actually assume that this stock will hit a wall up here and continue to pull back. Now, we've identified potentially maybe a shorter term uptrend in this one as we made a lower set of lows back here in February, another lower set in March. It looks like maybe potentially we could be making another lower set down here at April. This stock is basically painting 2 different pictures. It's starting to wedge out from a price perspective. This is when buyers and sellers start that push-pull on a stock. At one point, one of the two will give out, and this stock will break up or down. Now, you didn't tune into the show for me to tell you, well, Tesla stock might go up, it might go down. That's obvious, but in the shorter term, that's actually what we're anticipating with Tesla. As you get closer to the end of this range, again, maybe another month or two of trading inside this $1,000 price range, we'd expect this stock to break out one way or another. It's breaking to the upside if we get above $1,140 on this one, breaking to the downside if you get closer to about $900 per share. I personally think you continue to add to this stock. I wouldn't necessarily want to get my full allocation of Tesla right away. It's a stock I actually think you want to buy over the longer term because there's so many wonderful things going on with this company. It is ramping up beautifully. It is not cheaply valued from a market cap perspective, from a traditional valuation perspective. So that is going to lead to higher volatility in a name like this, as I'm sure many of you have already experienced if you have ever owned Tesla shares for any length of time. The stock can swing very hard one way or another. My recommendation is, quite frankly, continue to buy it when any weakness shows up in these shares. And it'll be interesting to see what they do with their $18 billion worth of cash, how they decide to deploy that within the company and maybe potentially make this an even better investment than it already is. That was Tesla. Hopefully you guys have a great day. Good luck with your investments.